Hey everyone, welcome back to Corporate Decoder, the place where we break down the complex world of business so you can understand what's really going on behind the numbers. And today we've got Galaxy Digital Inc. with their latest annual report, a real deep dive into the crypto and data center world. So buckle up because Galaxy Digital is showing us their financials for the year ending the 31st of December 2025. And trust me, there are some big numbers here with massive shifts. We'll be looking at how they're doing in the wild world of digital assets and their big push into data centers. Let's dive right into the heart of it, the financials. For the full year 2025, Galaxy Digital reported a net loss of $241.3 million. Now, this is a significant flip from 2024 when they raked in a profit of $346.7 million. Their total revenue for 2025 jumped up by 42% to $60.4 billion. That sounds huge, right? But here is the kicker. It's mostly driven by digital asset sales, which can be super volatile. Think about it like this. If you sell a lot of something that's price goes up and down wildly, your revenue will do the same. Digital asset sales alone massively increased by $17.7 billion. This jump was thanks to a huge trade they made in the third quarter of 2025, moving 80,000 Bitcoin, plus prices were generally higher that year. But remember, these sales also come with massive costs, so while the revenue looks impressive, a lot of it is eaten up by the cost of those digital assets. What's really telling is the impairment of digital assets, which shot up by 127%. This means they had to write down the value of some of their digital holdings because their worth dropped significantly. This shows the inherent risk and instability within their core digital asset business. And the result of all this revenue growth and also the big write-downs and costs is a net loss of $241.3 million in 2025. This is a big change from the $346.7 million profit in 2024. So the company is definitely in a period of flux with big swings in their bottom line. Looking at investments, they had a net loss of $122.5 million in 2025, a big change from the $258.8 million net gain in 2024. This is likely due to a downturn in the market for some of their key investments like those in forward industries and Bitcoin ETFs. Now let's look at their financial position as of the 31st of December 2025. Their digital intangible assets, which are basically their digital currency holdings, grew to $3.5 billion. That's a big increase of 38% from the previous year. This shows they are heavily invested in digital assets. But what is really interesting is their investment in property and equipment. It shot up from $237 million in 2024 to a massive $1.4 billion in 2025. This huge jump is clearly due to their strategic push into AI and high-performance computing data centers, particularly at their Helios campus. It seems they are serious about this new direction. Overall, their total assets increased by $4.2 billion, reaching $11.3 billion. This growth is driven by those digital assets and their big bet on data center infrastructure. On the flip side, their total liabilities also grew significantly to $8.3 billion. This increase is largely due to borrowing more money for their operations and a big issuance of exchangeable senior notes in October 2025 for $1.3 billion, which they are using to fund that data center build out. When we look at cash flow, operating activities used $316.6 million in 2025, a negative number showing they spent more on operations than they brought in. This is a big contrast to 2024 when they used $205 million, which was also negative but less so. Financing activities, however, provided a huge $2.4 billion. This came from issuing shares and a massive influx of cash from new notes payable, mainly that $1.3 billion issuance of 2031 exchangeable notes. So, they are raising a lot of money, but they are also spending a lot, especially on that data center project. It's also worth noting their risk factors. They're very open about the volatile nature of digital assets, the regulatory uncertainties, and the risks associated with their expansion into AI data centers. One thing that sticks out is the concentration of their digital assets with third parties like centralized trading platforms. Around 37% of their digital assets were held with these platforms in 2025. While they do their due diligence, this is a significant risk if any of these platforms face issues, like FTX did. Looking at their overall strategy, Galaxy Digital is trying to have a diversified business. They've got their original digital assets business, which is about trading, lending, and asset management, and now they're heavily investing in the data centers business for AI and high-performance computing. They also mentioned a new retail platform called Galaxion, launched in October 2025, aiming for individual investors. From a Warren Buffett perspective, what's interesting is their structure. They are heavily reliant on distributions from their operating partnership, GDH LP, to cover taxes and other expenses. This partnership structure is common but means that the health of the operating partnership directly impacts the parent company. And like many companies, Therese a concentration of voting power with their founder, Michael Novogratz. While he's a visionary leader, this concentration means he has a huge influence on corporate decisions which could align with or diverge from other shareholders' interests. So what's the takeaway here? Galaxy Digital is in a massive transition. They're pouring billions into building out data centers for AI and HPC, which if successful could be a huge long-term revenue driver, less correlated to volatile crypto prices. But this comes with immense risk. They admit they have limited experience in this area and the capital required is substantial. Their digital asset business, while seeing a revenue surge due to market conditions, is still showing the volatility and impairment costs associated with it, resulting in a net loss for 2025. They're balancing a high risk, high reward crypto exposure with a massive capital-intensive AI infrastructure bet. The success of this bet hinges on their ability to execute the data center build-out, secure long-term tenants like CoreWeave, and navigate the ongoing regulatory minefield of the digital asset space. For investors, it's a story of potential massive growth versus significant execution and market risks. They're betting big on the future of AI infrastructure, but the crypto side remains a wild card. What's your take on Galaxy Digital's big pivot to AI data centers, and where do you see their crypto business heading? Let me know in the comments below. If you found this breakdown helpful, give it a thumbs up and subscribe for more deep dives into corporate filings. And hey, if you want to chat more about these topics, join our Discord community, linked in the description. Thanks for watching and we'll see you in the next one.